Right now, there's a storm gathering just beyond the edge of sight, a storm that most people don't even realize is coming. But you, as a limited partner, you're smack in the middle of the heartbeat of this brewing chaos. The financial world is a delicate game, an intricate dance balanced on trust, timing, and sharp instincts. But what happens when the very foundation beneath that dance starts to crack? What if the next financial crash isn't driven by the usual suspects, not by debt crises or tech bubbles, but by something more hidden, more personal, more close to home? It's not the headlines that will warn you. It's the quiet, unsettling signs, the slow bleed of confidence, the shifting tides of trust, the hidden weaknesses in the system you help fuel. You think your role as a limited partner is safe, behind the scenes, insulated by contracts and funds, but that's exactly where the danger hides. Because when markets slip, it's the limited partners who often feel the initial pain, the frozen capital, the stalled deals, the cascading effect of missed opportunities and broken promises. The problem isn't just numbers dropping on a screen. It's livelihoods trembling, dreams deferred, and futures rewritten overnight. And here's the brutal truth. The way limited partnerships are structured right now, they can accelerate the downfall instead of stopping it. It starts with pressure, the pressure on fund managers to deliver fast, outsized returns no matter what. To chase the shiny, the new, the disruptive, even when the foundations are shaky. That pressure trickles down like poison. Limited partners want security, but what they get is risk dressed in fancy jargon and glossy pitch decks. Each quick pivot, each pressured exit, each overly aggressive move chips away at the trust that underpins everything. When trust fractures, panic spreads like wildfire. And once fear takes hold, rational decision-making goes out the window. You've probably seen cracks yourself, funds delaying distributions, valuations that don't feel real, strategies that sound good in theory but crumble under stress. But the fear isn't just about losing money now. It's the feeling that the system you've trusted could betray you when the stakes are highest, that the liquidity you depend on could dry up, that transparency might evaporate, and that chaos could strike at any moment. And that feeling, it's not paranoia. It's a warning. What if the very way limited partners are locked into long-term commitments without clear escape routes becomes the noose tightening around all of you when the real crisis hits? If a wave of defaults or fund failures were to happen, the panic would spread faster than emergency headlines. Secondary markets might freeze, valuations sink further, and suddenly, the so-called safe investments look like traps. The ripple effect wouldn't just take down portfolios, it would shake the entire fabric of financial trust. But here's the kicker. The path forward isn't just about bracing for impact or hoping you can weather the storm. It's about seizing control, rewriting the rules, and flipping the script from victim to victor. This is no time to wait for answers from traditional gatekeepers who may be too slow, too complacent, or too tied to the old ways. You've got to become smarter, more agile, more ruthless in guarding what you've built. That means demanding absolute clarity. No vague numbers, no glossy reports without substance. Question everything. What's really behind that valuation? Where is the real risk hidden? How liquid is that supposed to be? Don't take anything at face value. Push for more granular data. If there's one thing that can keep you safe, it's knowledge that's sharp and real, not manufactured. You've also got to rethink diversification. Limited partnerships can be tempting, locked, committed, sometimes exclusive. But if you're too concentrated in one kind of fund, one strategy, you're placing a bet on a single failing horse. Spread that risk. Look beyond the usual choices. Invest not just in blind trust, but in transparency and proven resilience. Funds that have weathered past storms, managers who have a record of tough decisions, who don't fold first when the pressure mounts. Pressure is real, and so is fear, but there's a third path: foresight. That means identifying the early warning signs like a sudden slowdown in distributions, delayed audits, changes in fund leadership, or shifts in investment focus that don't add up. These signs aren't whispers, they're screams coded in silence. The best limited partners are already scanning for these signals, running their own audits, bringing in experts who won't sugarcoat the truth. When you see the first rumble, you act fast, not after the crash has already happened. And when the worst comes, because the markets always cycle, don't get trapped in paralysis. Pause, assess, renegotiate. Fight for terms that protect you, not just on paper, but in real time. Remember, limited partners aren't just silent check writers. Your voice matters. Use it. Demand transparency, fight for liquidity rights, and push for flexibility that can save you when the fire starts. But there's something deeper, and it's something many overlook: the power of collective action. Alone, the limited partner feels isolated, trapped within contracts and legalese. Together, you become a force to be reckoned with. Align with other limited partners who think like you, who see the risks and are willing to act before the crowd panics. Pool your knowledge, your influence, your leverage. Bands of informed, urgent, limited partners pushing back on managers who take reckless risks. This isn't just theory. It's the future of survival in an unstable world. The emotional toll cannot be ignored either. Watching portfolios shrink, hearing the silence where deals once promised gains, it can feel like a punch in the gut, a betrayal of all the work and trust poured in. But surrender to despair and you lose everything faster. Instead, channel that fear into discipline. Use it as fuel for relentless scrutiny and smarter decision-making. When the panic hits, the limited partner who acts out of clarity, not emotion, will be the one standing while others fall. And listen carefully. This battle isn't just financial. It's about reclaiming your freedom from systems designed to keep you locked in and dependent. Liberation as a limited partner means more than money. It means owning your power to influence, to question, to act with foresight and courage. It's about refusing to be the victim of a system that profits off your blindness. So when doubts creep in, when the temptation to look away grows stronger, remember this moment, because it's your chance to turn the tide. The next financial crash might not be just a global event out there somewhere. It might start quietly in the choices the limited partners make today. But it doesn't have to destroy you. Speak up. Learn more than you think you need. Build allies. Demand transparency. Prepare for volatility as your new normal. Above all, refuse to be blindsided. This is your mission now, a call to be relentless, strategic, and awake beyond the noise. The stakes have never been higher, but neither has your potential to not just survive, but shape what comes next. When the chaos comes, the limited partners who act with clarity, courage, and unity won't just weather the crash. They'll redefine the entire game.